Business leaders respond to market turmoil amid economic uncertainty. The American economy faces significant turbulence, and business leaders are closely monitoring the situation. Joining the discussion are Frank Holland, anchor of CNBC's Worldwide Exchange, Eugene Daniels, MSNBC senior Washington correspondent and soon-to-be morning host of the Weekend Edition, and Catherine Rampell, newly announced co-host of MSNBC's Evening Edition on weekends. A shaky start to the trading day. Frank Holland reports that the stock market has experienced a tumultuous 24 hours, with a significant sell-off affecting investor confidence. As trading began, market indices showed mixed results. The S&P 500 was slightly up, the Dow Jones Industrial Average had dropped over 100 points, and the Nasdaq, recovering from its worst day since 2022, had edged up by about 0.5%. However, this modest rebound did little to allay fears over a broader downturn. The stock market has seen a dramatic $4 trillion loss in market value since reaching its all-time high less than a month ago on February 19. Analysts at Citigroup have cautioned that the era of U.S. economic exceptionalism may be taking a pause, reflecting growing pessimism on Wall Street. Economic concerns deepen beyond the stock market. Broader economic concerns are mounting. Rising inflation, fears of a potential recession, and consumer spending slowdowns are all contributing factors. Tariff-related disruptions are exacerbating inflationary pressures, which in turn stoke fears of an economic downturn. Delta Airlines recently warned that its profits would be lower than anticipated due to decreased business and consumer travel spending. Major retailers like Kohl's and Dick's Sporting Goods have also highlighted weakening consumer demand. The tech sector, which has been a dominant force in driving market gains over the past 2 years, has faced notable setbacks. Jim Cramer of CNBC's Mad Money remarked that the so-called Magnificent Seven, a group of high-performing stocks, no longer holds the same weight. In his view, companies like Tesla and Nvidia have shifted from being market leaders to behaving more like meme stocks, responding more to investor sentiment than underlying fundamentals. Upcoming market catalysts. Investors are now looking ahead to a crucial economic report, the upcoming Consumer Price Index, CPI, inflation data. A hotter-than-expected reading could trigger another market downturn. With the next Federal Reserve meeting approaching, any significant inflationary surprise might alter expectations for interest rate policies. Fed Chair Jerome Powell recently stated that the central bank is taking a wait-and-see approach regarding future policy adjustments, but recession concerns continue to grow. Government policies and economic strategy. Catherine Rampell weighed in on how President Trump's economic policies are affecting the market. She noted that while Trump inherited a strong economy, his actions, particularly regarding tariffs and regulatory uncertainty, have led to economic instability. The continuous cycle of imposing, suspending, and reinstating tariffs has made it difficult for businesses to plan for the future. Additionally, Trump's threats to deport critical labor forces and his confrontations with the Federal Reserve have heightened concerns about economic stability. While some argue that tariffs are a long-term strategic move, they have already impacted consumer confidence, which is now declining. Political risks and market perception. Eugene Daniels added that while the White House downplays stock market volatility, consumer sentiment remains a crucial factor. Many Americans feel the economic strain, and public perception can significantly influence political outcomes. Learning from past administrations, it is evident that how the White House communicates economic strategy will play a key role in shaping voter confidence. Trump has historically pointed to stock market gains as a measure of his success but has downplayed recent losses. This shift in messaging underscores the unpredictable nature of current economic policy decisions. For instance, in real-time developments, Trump announced on Truth Social that in response to Canada's new 25% tariff on electricity exports to the US, his administration will impose a 50% tariff on all imported steel, another move likely to further disrupt market stability. Outlook and investor strategy. As the markets continue to react to shifting policies and economic indicators, investors are increasingly moving capital into defensive sectors like healthcare and utilities, as well as the bond market. The yield on the 10-year Treasury has declined by 50 basis points from its recent high, signaling that investors are seeking safe haven assets amid market volatility. With uncertainty looming over both the market and the broader economy, the coming weeks will be critical in determining the trajectory of economic growth and investor sentiment.